Ignition sequence start. 6, 5, 4, 3, 2, 1, 0. Liftoff. We have a liftoff.
Hey everybody, this is the Digital Asset Investor, and do not use leverage in crypto. Excuse me. Folks, if you don't use leverage in crypto, this is when it gets the most exciting. I know that sounds weird to you, but once you, and I'm not a financial advisor, but I can tell you what I've learned over time is to, well, first of all, I never invest more than I can afford to lose. I've done this, I've been in XRP since 2014. But all along that way, these are the moments where I've continued to scoop up XRP. And I did yesterday, and I'm going to prep myself at these prices. We're at 187 right now. I'm going to prep myself to buy more here. I hope that we stay here or even go lower, because I'm going to back the truck up if it stays like this. Now, we're going to start with keeping your eye on the ball. This is a $2.82 trillion market. Listen to what Charles Hoskinson says here.
We've got an administration in the United States that is crypto friendly. Does that make a difference to any downscale that we could see here that typically could last a lot longer if it were not those factors in the backdrop?
Well, it's a very different kind of bull market than the last three times that we had the 4-year cycle. The last three times it was retail-led, most notably in 2021, where everything reached an all-time high. But this time around, you have BlackRock and Goldman Sachs and Morgan Stanley and the U.S. government, all others coming in. And really, there's a big transition where a lot of assets that are in the crypto space are real world assets. If you take a look at the growth of verticals like stablecoins, for example, we're over 250 billion issued, and it's going to be over $1 trillion by 2030. And it's kind of a soft dollarization of the developing world. And there's a lot of estimates that by 2030 to 2035, there's going to be about $10 trillion worth of equities and other assets, traditional assets in the cryptocurrency space. So when you have large institutions, nation states like the United States, and a huge growth of the user base from about 550 million to 1 billion, the fundamentals are just sound. There's no way for these markets to stay depressed forever. They're just reflecting the current macro environment.
That's
Charles,
correct.
It's fascinating.
Now, let me tell you what I find interesting, because we're just now starting to see, we're just now starting to see a lot of these. Now, remember what we've watched. We've watched Michael Saylor and Tom Lee propped up and talking about their funds and their DATs or whatever for the last year. Well, you remember I called it the Tom Lee Ethereum Roadshow. We've been watching that. Now, what's interesting about markets, and I've learned this over time too, is anytime you see someone being propped up on CNBC over and over and over, guess who's watching these guys constantly talking their book? The guys that are watching these guys are the short sellers. That's opportunity for them. And they're watching these build-ups and all this. So I'm sitting here looking at this. Take a step back. All we've heard, Bitcoin, Ethereum, DATs, ETFs, and all that for the last year or two. Meanwhile, XRP's been trying to get out from under their lawsuit and all this stuff. Guess who, over the last week or two, has been announcing that they're going to have DATs, announcing that ETFs are about to go live. That would be XRP. Meanwhile, I'm about to show you what the Tom Lees and the Michael Saylors are going through. And here's where it starts. Rumor a few major crypto funds blew up during October 10th flash crash that wiped out 19 billion. Now, they're now forced to sell Bitcoin and Ethereum to cover losses, which explains the relentless dumping. This also fits why alt Bitcoin pairs are holding up well. Here's Tom Lee. Now, look, normally Tom Lee clips bore me, but this one is worth hearing.
I think the crypto market has been limping along since October 10th, because on that date was a negative shock. Today's stock market looks a lot like an echo of what happened October 10th. But on October 10th, that liquidation was so big, Brian, it really crippled market makers. And our market makers are critical in crypto because they provide liquidity. I mean, they act almost as the central bank in crypto. And if they've got a hole in their balance sheet that they need to raise capital for, they need to reflexively reduce their balance sheet, reduce trading, and if prices fall, they've got to then do more selling. So I think that this drip that's been taking place for the last few weeks in crypto reflects this market maker crippling. And so in 2022, it took 8 weeks for that to really get flushed out. We're only 6 weeks into it. So I kind of concur. I think crypto, Bitcoin and Ethereum are in some ways a leading indicator for equities because of that unwind and now this sort of limping and weakened liquidity.
Well, that was the point that my very, very smart team behind me, we put together for the top of the show, which was showing that Bitcoin turned down today before the market did. All right, take us back. So October 6th, I think it was October 6th or 7th, Bitcoin hit 125,000. Yeah, a couple days later, it was still around 120,000. Now, obviously, Bitcoin's at 86 and change. So what specifically occurred on or around October 10th that would lead us to where we are now on what, November 20th?
Yeah. Well, Steve actually pointed this out. There's a lot of what they call automated processes in crypto. One of them is called ADL, okay, and that's an automatic liquidation feature that would take place if someone's account or their collateral drops in price. It's essentially like a margin call. On a specific exchange, a stablecoin's price varied from other exchanges. It actually, stablecoin should stay at $1. It dropped to 65 cents. But that only happened within the exchange quotes, within this exchange because of liquidity. That triggered an ADL, an automatic liquidation across many accounts. It wiped out, as that spread across other exchanges, right? Because liquidations cascade. Almost 2 million crypto accounts got wiped out, even though minutes before they were actually profitable accounts.
So who is behind this? Like, who's the they in the market makers and they got hit? Who's the they?
Well, Brian, I am aware of names, but because I'm not someone who wants to name names, I think what you should keep in mind is that this error is actually essentially a bug, a code error, because I think in retrospect, they would have pulled pricing from across exchanges to set the price for that stablecoin rather than relying internal.
Ooh, who's going to come and save the day? These crypto people just can't do it right. In comes Wall Street. Can you smell it? And then, this is also a great clip. These guys are the poster children. Tom Lee and Michael Saylor are the poster children for why you don't leverage in crypto.
That's the low, and Ethereum bottoms at 2,500. The recovery from there to all-time highs will be faster than the decline.
I do agree with that, folks. I've been here many times. Bring it on. I'm going to figure out a way to buy more XRP today.
That's what happened in every crypto decline, because what you have is all this spooled up energy. People are sitting and waiting, and there's panic selling, forced sellers, but the buyers are being patient. That's what will happen. And again, you guys kind of hit it on the head. MicroStrategy is probably the most important stock to watch right now, because that is the Bitcoin proxy. It's the most liquid name. It seems to me that when in the crypto world, when they're trying to hedge their longs in Bitcoin and Ethereum, they can't find any other way to hedge it except shorting the liquid stocks that
this
are the
reminds
proxy.
okay
So that's the MicroStrategies.
This is one of, if not the most important interviews I've done this year, and that's respectfully to every other guest we've had on this fine network and fine show, because I want to dive in a little bit deeper to what you're saying, that basically there's some kind of a software coding problem that's causing a lot of this. Let's bring up, guys, if we can, MSTR. That is the company formerly
Only Wall Street can do it right.
known as MicroStrategy, now just known as Strategy. The stock's down 50% in 3 months, Tom. It's down about 65% from its highs in the middle of July. It works, or people think they do, but inside that engine, there are gears, there are pistons, there are things that are occurring that for 99.9% of our audience, they don't do this for a living. We get it. This is a really important interview. I'm going to let you go, Tom. We are watching MicroStrategy.
Okay, so look at what this guy says is going on with JP Morgan.
So recently I posted a video about the margin requirement at JP Morgan for MSTR. Now, I've learned something even more interesting. There's a customer that was trying to send their MSTR stock out of JP Morgan. So they're trying to transfer that stock from JP Morgan to a different brokerage account, okay? Now, if you hold stock in a margin account, JP Morgan can hypothecate that stock. They can lend that stock out, or they can use that stock and they can short that stock. Now, this customer wasn't able to send those shares out. JP Morgan didn't have the stock to be able to send out. So that means that JP Morgan doesn't have access to those shares. So they're either short or they lent out all the stock and they can't get it back, or they can't borrow other stock to be able to deliver out that stock. Now that means that JP Morgan as an institution is short to deliver on those shares. And as a huge institution and only trying to deliver out a small number of shares, that's pretty curious. Like, why does JP Morgan not have access to any shares to be able to deliver out to this customer?
Okay, I tried to warn you 1,000 times about this guy. You're telling me, right here it says, according to Bloomberg, Michael Saylor's strategy faces potential removal from major benchmarks such as MSCI USA and NASDAQ 100 passive vehicles tied to the company account for nearly $9 billion in market exposure, decision expected by January 15th. I warned you, and I warned you, and I warned you. Are you telling me that Wall Street short sellers do not hear this whack job out here talking about there's no second best and all these weird things he's been saying and putting out these weird photos trying to make himself look like Jesus or something? Red flag city. I warned you 1,000 times. This isn't hard to figure out. A whack job's a whack job's a whack job. I don't care if he did have the wind at his back because Bitcoin was going up for a while. Brad Garlinghouse, it was very uncomfortable watching Tom Lee sit there and have things explained to him. But you can't, listen, I said it right here. Just a couple of weeks ago, Brad Garlinghouse explained things to Tom Lee. Timing is everything. Bitcoin and Ethereum DATs are in trouble after a year of relentless promotion. It can't be a coincidence that XRP, ETFs, and DATs are rolling out in the crash, almost like a rising phoenix.
You're demonstrating that we don't have a global consensus about crypto. Even in this conversation, and I agree that it still is early, partly because there is not a global consensus about some of these things. Agreed. And I think some of the use cases, we're still extremely early in terms of scaled use cases. Circle is certainly one example that has started to have a scaled use case around a stable coin. But I think the crypto industry, I agree, the next 16 years, I think will be better than the last 16 years, because you'll finally see applications emerging that up until now have just been the store of value story or speculation.
Boom. All right. Now, I think I'm going to go into these in the group, but let me tell you what, I bought more XRP yesterday, and I said if you haven't heard this Spaces, if you had heard this Spaces run by Bitwise yesterday, you would have bought more too. And I'm not a financial advisor, but I'm just telling you. And I'm going to play some of the key clips out of this in the group, because it's all laid out for you where this is all going. Go to daixrp.com for the Patreon. If you'd rather join through YouTube, click join below any of these videos. If you'd rather join through X, hit subscribe. We do the full video plus the extended video with no commercials. I'm the digital asset investor. I'm not an investment advisor. This is for entertainment purposes only. Please subscribe, hit the like button, tell your friends and family. Let's go hear it. All right.